You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 17th day of July, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. First live broadcast from 9:30 a.m. to 11:30 a.m. Eastern. That's our live training room. And it is reserved for members only and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, when Michael comes on in a little bit, he will show you exactly how to do it. There's no credit card required. The weekend doesn't count against you. And you're not just getting a free trial of the live training room. We're actually going to treat you like a member, or a passport holder, as our members are called, for 5 consecutive trading days. So it doesn't matter what day of the week or weekend or hour of the day you sign up for the trial. First, we're going to get your desktop set up, get your indicators indicating, and then your trial will actually begin the following day. So if you did that today, your trial would start tomorrow, Thursday, Friday. Saturday, Sunday won't count against you, even though there are markets that trade over the weekend. And then you'll still get Monday, Tuesday, and Wednesday of next week. So, 5 consecutive trading days, no matter when you sign up. But again, he'll show you exactly how to do that when he comes on. Now, when the live training room ends each day, we take a 30-minute break and come back for this broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There are 2 different ways to join the afternoon broadcast live. I'm going to give you the best way first. You only have to do this once. Go to mytradingiq.com, scroll down the page to where it says afternoon broadcast. Click the link, fill out the 30-second registration form, and you're done. It's going to get you in the same day. But going forward, what's going to happen is every trading day, you'll get an email about an hour before this broadcast starts. Now, in that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you'll have access to the question box so that you can ask questions and be a part of the discussion. Of course, there will be days when you're out of the office, away from the desktop, but you still want to join live. There'll also be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel. Now, it's very easy to remember. youtube.com/CFRN. You already have the YouTube part memorized? So, Really, all you have to remember is the CFRN part. Not only do we broadcast live, as we're doing right now, simulcasting, if you will, in two different places. Not only do we broadcast live every trading day on our YouTube channel, but we archive each and every daily episode. There are over 2,600 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it is a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can literally see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. Just pick some days at random. Watch a little bit, fast forward a little bit, watch a little bit, jump to another day, week, month, year. Do the same thing. Now, obviously, you're not going to watch them all, but I do encourage you to watch some of them, at least a little bit, to get a feel. And of course, the more recent broadcasts are going to be more relevant to what's going on in the markets and the world right now. YouTube.com/CFRN. Okay, our daily schedule runs like this. We start out with our daily devotional, word of prayer, and I share some important news with you. Then we get into a recap of the alerts. And about 12:45, 12:50, Michael joins us and gives us a recap of what happened in the live training room this morning. And then at the top of the hour, we go live on the TradingView platform and do about 30 minutes of live trading. Then I come back and I finish the recap of the alerts if I haven't already. And then I wrap everything up with our good word for the day. So let's get cracking. We're on a 5-day devotional. This is day 3. The title is The Recall of Heaven. The scripture I'll be sharing today is John 21, verses 1 through 25. I'll be sharing with you from the Message translation. After this, Jesus appeared again to the disciples, this time at the Tiberias Sea, or the Sea of Galilee. This is how he did it. Simon Peter, Thomas, nicknamed Twin, Nathanael from Cana in Galilee, the brothers Zebedee, and 2 other disciples were together. Simon Peter announced, "I'm going fishing." The rest of them replied, "We're going with you." They went out and got in the boat. They caught nothing that night. When the sun came up, Jesus was standing on the beach, but they didn't recognize him. Jesus spoke to them. "Good morning. Did you catch anything for breakfast?" They answered, "No." He said, "Throw the net off the right side of the boat and see what happens." They did what he said. All of a sudden, there were so many fish in it, they weren't strong enough to pull it in. Then the disciple Jesus said to Peter, "It's the Master." When Simon Peter realized it was the Master, he threw on some clothes, for he was stripped down for work, and dove into the sea. The other disciples came in by boat, for they weren't far from land, 100 yards or so, pulling along the net full of fish. When they got out of the boat, they saw a fire laid, with fish and bread cooking on it. Jesus said, "Bring some of the fish you've just caught." Simon Peter joined them and pulled the net to shore. 153 big fish, And even with all those fish, the net didn't rip. Jesus said, "Breakfast is ready." Not one of the disciples dared ask, "Who are you?" They knew it was the Master. Jesus then took the bread and gave it to them. He did the same with the fish. This was now the third time Jesus had shown himself alive to the disciples since being raised from the dead. After breakfast, Jesus said to Simon Peter, "Simon, son of John, do you love me more than these?" "Yes, Master, you know I love you." Jesus said, "Feed my lambs." He then asked a second time, "Simon, son of John, do you love me?" "Yes, Master, you know I love you." Jesus said, "Shepherd my sheep." Then he said it a third time, "Simon, son of John, do you love me?" Peter was upset that he asked for the third time, "Do you love me?" So he answered, "Master, you know everything there is to know. You've got to know that I love you." Jesus said, "Feed my sheep." I'm telling you the very truth now. When you were young, you dressed yourself up and went wherever you wished. But when you get old, you'll have to stretch out your hands while someone else dresses you and takes you where you don't want to go. He said this to hint at the kind of death by which Peter would glorify God. And then he commanded, "Follow me." Turning his head, Peter noticed the disciple Jesus loved following right behind. When Peter noticed him, he asked Jesus, "Master, what's going to happen to him?" Jesus said, "If I want him to live until I come again, what's that to you? You follow me." That is how the rumor got out among the brothers that this disciple wouldn't die. But that is not what Jesus said. He simply said, "If I want him to live until I come again, what's that to you?" This is the same disciple who was eyewitness to all these things and wrote them down. And we all know that his eyewitness account is reliable and accurate. There are so many other things Jesus did. If they were all written down, each of them one by one, I can't imagine a world big enough to hold such a library of books. Again, that was John 21, verses 1 through 25 from the Message translation. So let's talk about restoration. If God's assignment seems distant or unattainable, perhaps life circumstances have clouded his purpose for you. But take heart. Just as a company recalls its products to restore them to their intended function, we too can return to God for restoration. This process is not a punishment, but a loving act of God to bring us back to our true purpose. Prayer is the workshop where your life is restored, and your purpose is realigned with God's purpose. In John 21, we see a similar story. The disciples, who had been trained, loved, and provided for by Jesus, were ready to continue their calling. However, life happened. After Jesus' crucifixion, they were confused and afraid, unsure of their purpose. Just like those disciples, we can allow life situations to distort or deviate us from God's call. It could be a relationship, a job, a friendship, or anything else that takes our time and focus. These things can cause us to need restoration. Life sometimes leaves a mark, but Jesus is here today, just as he was on the shore in John 21. Despite spending 3 years with Jesus, the disciples were uncertain of their calling. If you find yourself in a similar place of uncertainty today, know that you are not alone. All God needs from you is a willing heart and your obedience. A willing heart without obedience is not useful, but with God, even the most uncertain path can lead to his purpose. Are you trying to do things in your own strength? Are you building businesses, entering relationships, and surrounding yourself with people Jesus never called you to? Well, Proverbs 16:25 says this: "There's a way that seems right to a man, but its end is the way of death." Now, this proverb is talking about spiritual death. It's time to return to God's workshop for restoration, to realign your life with his purpose. Remember, you're not just called to meet in a building, but to be an agent of change, to impact everyone you come in contact with. Embrace the call and let God restore you to your original purpose. In his hands, you will find the guidance and direction you need. Join me in a word of prayer. Heavenly Father, we thank you for this powerful lesson in John 21. As Jesus revealed himself to his disciples by the Sea of Galilee, we are reminded of his constant presence and unfailing love. Lord, just as Jesus provided for the disciples and restored Peter, we ask that you guide and provide for us in our daily lives. Help us to follow Jesus wholeheartedly, tending to your flock with love and dedication. May we be reminded of our calling, strengthened by your grace to fulfill it. It's in Jesus' name we believe and pray. Everybody said, amen. Well, amen and happy Wednesday. Let me give you the numbers from around the world. We've got much to talk about today. Starting here in the U.S., it's a real head scratcher. Here's the indices, or the cash markets as they're called. The Dow is up 200 points. The NASDAQ is down 494. That's over 2.5%. The S&P 500 is down 73 points, almost 1.5%. And the Russell 2000, our man in the street, is down 14. Now, the Russell 2000 for the last 4 days has been this incredible rocket ship to the upside. Some cooling, some backpedaling, some retracement obviously do. We know markets don't grow, trees don't grow to the sky, and neither do markets. But we'll talk more about that as we get into the charts. In the commodity basket, we did have crude inventories today, and as a result, crude oil is up $1.77, trading $82.53 last. That's a gain of over 2%. Gold down $2.20, trading 24.6560 last. Silver down 99 cents, trading 30.46 last. That's a drop of over 3% or $5,000 per contract traded. In the Asian markets at the close, the Nikkei dropped 177 points. Shanghai fell 13. The Hang Seng gained 11. And in the European markets at the close, FTSE posted a gain of 22 points. The DAX fell 80. The CAC dropped 9. So, we had a mixed day in Asia. It was a mixed day in the UK. And because of the Dow, it is a mixed Radio Wednesday here in the US of A. As you know, as futures traders, we like to see the 4 major indices all the same color. Either all red or all green, we don't care which, because we can be long, short, long again, all in the same hour, if that's what the chart in front of us tells us to do. And when we have the markets all the same color, there's better follow through. But there was no problem with follow through this morning on the NASDAQ, the S&P, or even the Russell. So, with that, let's jump to some news. U.S. stocks were mixed in early trading today, with the NASDAQ dropping sharply as techs came under dual pressure from worries about U.S. export curbs on China and Donald Trump's stance on Taiwan. Stocks are pulling back as concerns about risks to tech names eclipse the high hopes for interest rate cuts that have fueled the rally in recent days. Those worries weighed on heavyweights whose AI-fueled gains have helped propel the S&P 500 to fresh record highs this year, day after day after day after day, with chipmaker Nvidia down today about 5%. The Biden administration has told its allies, looking at imposing tougher restrictions on companies still making advanced chip technology available to China, despite existing export curbs. Bloomberg reported shares of ASML, cited as a potential target, dropping over 10% after the Dutch chip gear maker posted solid quarterly earnings. Meanwhile, the Republican nominee Trump questioned U.S. defense support for Taiwan in a Bloomberg interview, suggesting the island claimed by China should pay for U.S. protection. Chipmaker TSMC fell more than 5%, having erased close to $30 billion in market value in Taiwan as stocks slipped. New comments from former President Donald Trump are turning up the political pressure on the Federal Reserve as policymakers make it clear they are getting closer to cutting interest rates. In an interview with Bloomberg published last night, the Republican nominee again reiterated that central bank officials should not ease monetary policy before the November election. Interesting. It's something that they know they shouldn't be doing, he said. But Fed officials, including Fed Governor Chris Waller, in a new speech Wednesday titled "Getting Closer," are suggesting that the time for cuts is in fact drawing near. Might buy a little votes. 1 or 2 maybe. While I don't believe we have reached our final destination, I do believe we are getting closer to the time when a cut in the policy rate is warranted, according to Waller in his speech at the Kansas City Federal Reserve. Evidence is mounting that disappointing inflation data in the first 3 months of the year may have been an aberration. Waller added, and that inflation data so far from the second quarter shows steady progress towards the Fed's goal of 2%. Markets are currently betting the central bank will cut rates in September, just 7 weeks before Election Day. Traders are pricing in a more than 90% chance of that happening, up from 70% just a few weeks ago. Now, a September rate cut could cause the central bank to face political criticism, not just from Trump, but also from Republican and Democratic lawmakers. Lawmakers from both parties signaled last week during congressional testimony from Fed Chair Jerome Powell they would criticize the central bank if this key September decision doesn't go their way. If Powell and his colleagues choose to keep rates at a 23-year high, a growing chorus of Democratic critics calling for cuts may reach a crescendo. But if policymakers do indeed cut, Republicans from Trump on down will be sure to cast the move as caving to election year pressure. Powell's response to the new wave of political pressure was to echo an independent, apolitical approach he has honed throughout 2024, emphasizing that the only criteria that matters to him is data on prices and jobs. Are you a friend of Morning Joe? Don't know who that is? You probably aren't. Caesar Conde has found himself yet again on the receiving end of a stinging on-air rebuke from his high-wattage MSNBC stars. For the second time in only a few months, questions about the NBC News Group chairman's leadership were raised in extraordinary fashion, with the Morning Joe team on Tuesday publicly expressing dismay that NBC brass had the day before pulled their broadcast from the air in wake of the assassination attempt on former President Donald Trump. Joe Scarborough, alongside co-host Micah Brzezinski and Willie Geist, offered viewers a peek behind the curtain into the conspicuous decision-making process that transpired over the weekend. Scarborough said that the Morning Joe team had been informed Sunday evening that all of MSNBC's opinion-oriented dayside lineup would be preempted for a single NBC news feed covering the attempt on Trump's life. But as Scarborough noted, that didn't happen. Instead of high-profile NBC News anchors such as Lester Holt and Savannah Guthrie anchoring special coverage, MSNBC aired 2 hours of MSNBC reports and 2 hours of its streaming service programming NBC News Now. And oddly enough, no other MSNBC shows were preempted, only Morning Joe. We don't know why that was. Our team is not given a good answer. I don't know why it happened, Scarborough said, but it happened. Well, Joe, maybe you're not the most popular guy in America, but I digress. Google, Microsoft are offering Chinese companies access to NVIDIA's AI chips by providing data center services in locations outside of China. Now, the Biden administration has taken measures to prevent firms in China from using U.S. technology for artificial intelligence, including advanced semiconductors. Microsoft, Alphabet, NVIDIA, and the Department of Commerce did not immediately respond to Reuters for comment. So you see what's happening here, right? Google and Microsoft are doing an end around by using their cloud divisions to give the Chinese access to technology that our current president has said, no way. The S&P 500 index has nowhere to go from here but down, according to who? Goldman Sachs. Yeah. Their tactical strategist, Scott Rubner, said, I am not buying this dip. That's because this Wednesday, July 17th, today, has historically marked a turning point for returns on the equities benchmark. The Goldman Global Markets Division Managing Director said, citing data going back to 1928. And what follows, he says, is August, typically the worst month for outflows from passive equity and mutual funds. Weak seasonality, stretched positioning, and with all the good news already priced in, the index is on the precipice of a summer correction. It's a view Goldman's trading desk has been leaning into since at least early June. Rubner wrote in a note to clients on Wednesday, the pain trade is no longer higher from here. Guys, you know I've been preaching that sermon every day for some time. And our last piece of news, at least one commissioner of the Securities and Exchange Commission is reopening the door to one of the biggest things missing from Ethereum ETFs as they prepare to make their trading debuts. Ethereum ETF issuers, including Van Eck and Fidelity, had originally sought to be able to stake the underlying Ethereum held via their respective products. The issuers removed that component ahead of being approved by the SEC in May. But in a new interview with Coinage, SEC Commissioner Hester Peirce floated that Ethereum ETFs being granted permission to stake Ether could be reconsidered after they begin trading. I think certainly something like staking or any feature of the product we saw on the Bitcoin exchange traded products too, right? There were features of the product that some people would have liked to see included but weren't. Those are always open for reconsideration. As far as I'm concerned, she said, noting that her views aren't necessarily shared by the other commissioners. Now, staking Ethereum, which involves locking up Ether tokens to secure the proof-of-stake blockchain, currently pays out the equivalent of about 4% APY in more coins. SEC Chair Gary Gensler has long taken the position that staking constitutes an investment contract. As far as whether issuers remove that component or be directed to do so, Commissioner Peirce would not say. The Ethereum ETF approval process was far more of a surprise than the Bitcoin ETF process that preceded it. Rather than being approved by a commissioner vote, the SEC approved Ethereum ETFs via delegated authority to their Trading and Markets Division. Regardless, Commissioner Peirce relayed her disappointment in how heavy-handed yet another cryptocurrency approval process has become. She said we shouldn't strive to have drama around the launch of products like this. It should just be, they get to trade and we'll see whether people want to buy them or not. And that should be how it plays out. According to analysts, demand for these products are expected to be strong, even without staking included from the start. Fundstrat's Sean Farrell has predicted Ethereum ETFs could attract more than $5 billion in net inflows in just the first few months of trading. New products are expected to begin trading last week. And guys, there could probably be no bigger news for anyone who's an owner of CTG. Now, I have to apologize because I got to jump off for a quick second, but I'll be right back. I promise. Please accept my apology. Sometimes there's just things even beyond my control. All right, next on the agenda. Let's get our way over to, you know what? I just got a brand new logic recap. So let me format it for viewing real quick. Aha, there we go. All right. Thank you, Valerie, for that. As of 12 noon Eastern, since the market opened Sunday night, we've issued a total of 43 Logic 247 alerts. Logic 247 is our 24/7, around-the-clock E-mini alert service. It's not just E-minis, it's also crude, gold, silver, euro, and bonds. Over the last 311 weeks, we've issued over 17,200 individual handcrafted alerts. And what we've averaged is 20% or less of the alerts being stopped out based on market structure in a very simple process that I teach all of our passport holders in their one-on-one mentoring sessions. So at the time of this recap, we had 43 alerts issued. That includes the ones I issued this morning. Still waiting on the outcome of 18, but we have 38 actionable alerts, of which 4 or 11% again would have been stopped out based on market structure and that very simple process I teach all of our passport holders. Now, the purpose of the logic alerts is not so you can just trade the alerts and not have to worry about learning how to trade. I use the logic alerts to actually teach you how to read the chart. Remember when you started school, before you could learn anything else, first you had to learn how to read. I mean, you couldn't read your math textbook or your science textbook or any other textbook until you could read. Now, that type of reading is words and sentences and paragraphs, right? But in the financial markets, you have to learn to read the chart. And there are no words or sentences or paragraphs. There's candles, there's bars. Most important, there's market structure. And so I use the logic alerts to train all of our new passport holders how to read the chart so that they know with a great deal of certainty what the next high probability move is. Now, once one of our traders, and before this broadcast ends today, because Michael's going to be here in just a minute or two, I'm going to walk you through all of these individual alerts. But we have our original alert service. Now, 311 weeks, that's a long time. But long before we had Logic 247, we had our original alert service, the concierge trade alerts. Now, they're different. You see, the logic alerts, they can come out anytime around the clock, 24/7. Because futures trade around the clock and we have traders around the globe. But the CTAs are published as a static report each evening shortly after the Globex open. So we all know we're in the Wednesday session right now. But if you don't trade futures, you might not know that the Wednesday session began last night at 6 p.m. Eastern. The Globex markets go from 6 p.m. Eastern to 5 p.m. Eastern the following day. So every one of our members and trial members had all of these targets for all of these markets 10 minutes after the market opened. Now, the first thing you do when this report comes out is you make note where price is on the 30-minute chart of whatever markets you actually trade. The current price at this time is always going to be between these two numbers. So first note it on your 30-minute chart, then draw a line on your 30-minute chart at the long target and a line in the sand at the short target. They will serve as great visual cues to keep you on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. Now the BBC, that stands for bull-bear cross. When price crosses above the green line that you'll see on all my charts, that's the BBC, stands for bull-bear cross. When price crosses above the green line, we're bullish, anticipate higher prices. Price gets below the green line, bearish, we anticipate lower prices. Now, that's relative to whatever time frame you apply the BBC. Daily, weekly, monthly, 30-minute, 5-minute tick chart, range chart. But for the purpose of the alerts, both logic and concierge, it's always the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago. And if it's not broke, better leave it alone. Now, with the logic alerts, you get an entry price, an initial target, additional targets, and a final trade to target. But once you master reading the chart with the logic alerts, then you graduate to the CTAs. You look left to spot those entries, those targets, or obstacles, however you choose to view them. And you learn how price behaves at a weekly trading zone. This is critical because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon. If price is above the 30-minute BBC, it's trying to get to the zone above. If price is below the 30-minute BBC, it's trying to get to the zone below. We've published the zones for our members every week since December 14th of 2009, almost 15 years. They're published Monday morning at 6:15 a.m. Eastern. Once they're published Monday morning, they're carved in stone for the entire week. They do not change in any way whatsoever. Beyond that, just resist the urge to make it more complicated. As long as you know which way the wind is blowing, it's pretty simple. Reach your goal for the day. Again, all members and trial members had these targets 10 minutes after the open last night. And you'll see how important that is as we get into the 30-minute charts. But we're going to start out where we always do, the daily chart. Now, does anyone not understand which way the wind is blowing? Yes, that is a southerly direction. Now, let me explain something. Institutional traders, the ones who have account sizes and trade in such incredible size that they literally move price. Because of the size of their accounts, they have to look at daily, weekly, and monthly charts. The way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it's because of account size. So what I want you to do is I want you to train yourself to spend 2 minutes with the daily chart of whatever you're going to trade before you drop to the smaller time frames and actually start trading. Over time, this will improve your results considerably. Now, this green line is the BBC, but it's applied now to a daily chart. When price crosses below the green line, we're bearish. We anticipate lower prices. Price always reverts to the mean. In our case, the mean is green. It's called the BBC, bull bear cross. The pullback to the BBC holds more often than not, but eventually it will trade through, as it did here. Now that we're above the BBC, we anticipate higher prices, but we know a retracement is coming. The pullback holds more often than it doesn't. 1, 2, 3, 4 days, and then another leg, and another retracement, up to the new all-time historic high, put in on the 15th, at 57.1875. I'm sorry, yesterday, at 57.21 and a quarter. That is the new all-time historic high. And I've been talking about this 50% fib extension. If price gets below it, most likely headed to the 38, which, as we've previously seen, acted as good support. This time, I think it may be a little different. We may bounce at the 38 extension, but after the bounce, I believe we'll come to the BBC. And although the pullback holds more often than not, this may be the time it trades through. Right here is your 24% fib retracement. Most of you are familiar with fib retracements, but many of you may not be familiar with fib extensions. It's the same 14th century math, just applied in a different way. Now, Michael has arrived, so we're gonna go through all these markets and all those alerts before this broadcast ends. But right now, Michael's going to give us a recap of what happened in the live training room this morning. Then he'll go live on the TradingView platform for 30 minutes, do some live trading. Then I'll come back and I'll finish where we left off.
Excellent.
Looks good.
Great. Here we go then. Let's start here. Good afternoon, everyone. Today's Wednesday, the 17th day of July, 2024. Excuse me. So, if you have not signed up for a free trial with us, go here to mytradingiq.com. Man, I get me good starting with my voice. Go to mytradingiq.com and right here, click on the purple button. There is no credit card required for the trial. Click on that purple button. It's going to bring you to this registration page where all that we ask for is your name, your email, and your phone number. There's 5 multiple choice questions, and then down at the bottom, if you have an interest rate, give us your machine ID, and if you have TradingView, give us your login ID. Once you do that, we'll be able to enable the indicators for you so you can get them started and running at the beginning of your trial, which is what you should really try to do. All right, so this is kind of odd today. The numbers are just switched around a little bit. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 17th day of July, 2024. We made 10 ticks on the NQ, 29 ticks on the Russell, 48 ticks on the YM, and 3 ticks on the ES. That put us at 472.5 on the morning session. Today it took 10 minutes and 4 trades to get to the goal for the day. At that point, we're up $1,900 a contract, and we took a total of 13 trades this morning. Okay. So on the month now, we're halfway through the month now. It's $5,077.50 over 12 business days, averaging $423 per contract per 2-hour business day. And when we started off this month, we're over here and we're averaging about $100 a day, $105 a day, something like that. Now we're up to $423 per contract per morning session. On the year now, we're at $52,162 over 132 business days, averaging $395 per contract per morning session. In here, if you were to quit trading and add 1 contract per month, quit trading and add 1 contract per month. That's called the 24/20 blueprint. You have to earn $2,000 per contract to be able to add another contract. So this month, you have to earn $38,000 because we're at 19 contracts. But if you were starting out with one contract, you'd be at 7 right now. You have to earn $14,000 this month, but it shouldn't be an issue. Last month it was pretty close. We had to earn $12,000 this month, and we got to the last couple of days before we hit the 12,000 mark. But if you started out with one contract this year, so far you'd be at 7 contracts, and you would have averaged $1,523, and that is for working 45 hours for the whole year. 45 hours for the year, averaging $1,523 during those hours, for a total of $68,671. For like 1 week of work, $68,000. 1 normal week of work plus a little overtime, $68,000. Not too hard to take. If you could do that every day, every week, wouldn't you? At least for a year. Anyway, if you were to start like I did in January of last year, and you had 1 contract per month, now you'd be at 19 contracts like I am, and you would have worked a total of 45 hours, and you'd be averaging $6,565 per hour. $6,565 per hour, that whole period. All right, that's currently where you are, not the whole period. We didn't get up to $6,000 an hour until the end of last month, I think. Anyway, that's where you would be if you follow the plan. And I mean, that's a real thing. If you follow that plan, we do have guys who are following the plan, and those are real numbers right down there. Real numbers. If you started this year and did everything just like me in the room, quit trading when you got the goal for the day, you really would be averaging $1,523 an hour right now with 7 contracts on. It's not that hard to do. So far, I mean, if you look at the spreadsheet right here, so far this year we've only had 2 days where we're in double digits in time. This is unusual. It's not usually this easy or this good, but we get the green all the time. It's just usually some of those days, they start out a little rougher. But we've had a good run. And if you go all the way back here to the 25th of June, 1, 2, 3, 4 out of 16 days, we have 2 out of 16 days took us more than 10 minutes or more to get the goal for the day, but none of them in those 16 days took more than 4 trades to get the goal for the day. So that is pretty good stuff. The markets have been good at the open. Today they were really crazy right at the open. That's why it took 10 minutes. I stopped out on my first trade on the Russell, and then I got it back on my second trade on the Russell, third trade on the Russell. But well, we'll get into all that. Let's get into all that right now. The actual trades. We'll start out here on the YM. Okay, we had a little bit on every market. The YM and the YM and the Russell. YM and the Russell had the majority of it. The ES and the NQ together only had about 3 trades, which is unusual. But we got into the lesson plan today, and one of the things that I did today, you'll notice when I get to the Russell and the ES that there is limited indicators on the chart, and there's a reason for that. All right, so here we go. Let's see who's in here. If anybody filtered in from this morning's session, maybe. All right, so we started out in here. This is the YM. Right here at 9:30, we had a nice blue arrow there and there and there. I got the green arrow here for a break even. All right, and I didn't do anything for a little while until all the way over here, 9:53. My first trade was a 13 tick trade. My next trade over here was a 14 tick trade to get us to 27. And then in here, I had an 11 tick trade to get us to 38. And then I had one more 10 tick trade right here to get us to 48. That's what my YM looked like this morning. Scrolling all the way through here. Bert's not here right now, is he? No, he is not. Okay, I have to. For those of you guys who are using DT Pro still, or any of the gain, or any of the StoneX, introducing brokers, like if you're using Cannon Capital, if you're using Gain Trader, if you're using Zaner 360, if you're using any of those things, there's changes coming. You're all going to end up using the same thing. So I don't have to, when I make a change, I don't have to do it in 13 places anymore. I can do it in just one. And that is coming up. Okay, so we're all gonna have to do a download. It's gonna be a StoneX front end that looks just like the GT Pro front end, or whatever front end you're using. But we'll only have to maintain the code in one place, which is a good thing. Now, I was in the middle of the YM here. During the YM, I got into the lesson plan today, and I just talked and went right through the end of the session. So I didn't take another trade. But during the break, looks like there was a blue arrow here that would have stopped me out. There was a blue arrow here, we could have gotten it back because it's 10-tick stop on the YM. I want blue arrows, just some purple ones, right? And that was it. We ended with a plus 48 on the YM. Now the Russell, you can see the Russell and the ES have limited indicators on them. That is because I was going through this morning with the Russell and the ES only taking blue arrows, only taking ribbon trades, really. Only taking ribbon trades, blue arrows and purple arrows, or no arrows that hit the ribbon. So let's go back to the beginning here on the Russell. And we've got the rest of the week, guys, just to illustrate that you don't need to have all the stuff that's on the charts to be able to take the trades. Okay, so the market's opened up in here really jumpy. And this is my first trade right here, and that should be a first trade was on the Russell, and it was a red arrow. I stopped out on that. So we stopped out on the first one, and then I got all of it back, and then got the goal for the day on this one. We picked up 30 ticks on that one. So we stopped out on the very first one back here. I didn't get anything else all through here until here. I got 30 ticks on that one, and we got the goal for the day right there. That was right at 9:35, so just barely 9:35, 9:35.05. Just missed the under 10-minute window. I had a break even on that, and then I grabbed this one right here for 4 ticks to get me to 24, and then one more right here for 5 ticks to get me to 29. And I think that's all I did with the Russell. I got into the lesson plan. When I got into the lesson plan today, I was all the way in. I went down a rabbit hole after rabbit hole. But I think it was good stuff. I'm getting requests for the recording of the lesson plan, so. But you can see in there a whole bunch of blue arrows that I didn't do. And you don't see any green arrows, you don't see any black arrows because I took them off. All you're going to see are the blue and purple arrows in here. Right? That's all I was looking to take care on the Russell today. And there's a whole bunch of blue arrows. A lot of them worked out pretty well. Some of them didn't work out as well. The purple arrows, if the ribbon is spread or spreading, then the purple arrows usually work out really well. Let me see over here. I just got something on my phone. It doesn't really matter. All right, so then we get into the break. During the break, there was a purple arrow here that worked out well. A blue arrow here that didn't. Purple arrow there that didn't. Purple arrow here that didn't. Purple arrow here that did. And that was pretty much it during the break. All right. Again, the idea is to quit trading when you get the goal for the day. You don't want to be sitting there taking 100 trades a day. All right. The spreadsheet, this stuff in here, right down here, these are real numbers. Do you want to make $1,500 an hour after 7 months of work? If you want to do that, follow the plan. You don't have to work a lot of hours to follow the plan. You just got to be able to spend an hour or so a day, get in there, get the trading done, and get back to whatever else you're doing. So the next one is the ES. Now we did trade the ES today, and the ES you can see is on a 4-tick range. In the lesson plan, I put the green arrows back on, but I'm going to take it back off in here. Okay, so all we're interested in here was the blue arrows and the purple arrows on the ES today. Okay, blue and purple arrows on the ES. And here we go. So we started out in here. This is in the pre-market, and started out there. There was a blue arrow here that I missed that gave some profit I didn't get. A purple arrow here, perfect purple arrow there, went right up to the zone that I missed. Blue arrow here, nice blue arrow that I missed. Blue arrow here that I got some of. I got 3 ticks profit on that one. I got 3 ticks profit on that one. And then we missed, I missed that one right there. It would have been a break even had I gotten that purple arrow here. This was the leg length here. This is what I was expecting it to do on the way down. Right, this kind of got messed up here, and this was part of the lesson plan where it didn't complete the leg length right here when I was at that point. So it needed to complete the leg length right down here. is part of today's lesson plan to get down to here and complete the leg length. I don't know if it did. I think it did. But that's what we're looking at. There was a purple arrow right in the middle of all that I missed. Okay, it didn't complete it at that point. It did eventually complete it. Right down here was just about it. But some more stuff in there. Now we get into the break, and during the break, so on the Russell, we ended up with plus 29. Did I get to all that? Did I even talk about all those? We had minus 20, and yeah, I did. Okay, I did all those. We ended up with plus 29 on the Russell. On the ES, we had the plus 3, so we just had the one trade on the ES to get the plus 3. And now during the break, there was one blue purple arrow there that worked out well, one purple arrow here that didn't, one purple arrow here that did, blue arrow here that did, blue arrow here, combination that did, blue arrow here that did. And so it all worked out pretty well today, if that's what you were trading. Let me move this, sorry. Bobby, will that work on their mobile platform for Daniels? Whatever they're doing, Bobby, it's going to be, they're taking what we currently have with DT Pro. It's going to be the exact same code. What I have to do, what they asked me to do yesterday, is take the code that I've created, all the stuff on DT Pro, and stick it in this new system that they have. So it's going to be the equivalent of, for you, it should be pretty transparent. You'll probably be able to take your workspace from DT Pro and just open it up somewhere else. On the mobile, I'm not exactly sure how they're going to do that on the mobile, but I think it'll be pretty transparent there too. Okay. I know they gave me a different account ID, but my same ID with a different password to do all the install and all that stuff. But they gave me another link to do the download. Okay, I did the download yesterday, but I haven't done the install. I'll be able to show it to you tomorrow. I'm going to do it today, and I'll be able to show it to you tomorrow. I'll show you what it looks like, so you'll be able to see it's the same exact stuff. Okay, and if I can do it on my phone, I'll try to do it on my phone too. I don't know if
That's big news.
Yes, yes, it is. And I mean, it actually alleviates a bunch of things that, because we have stuff all over. We have 13 different introducing brokers. This stuff that you probably never even heard of, Dwayne, like Stage 5, and there's a couple of agricultural things that we have our indicators on. And whenever we make a change, which fortunately we don't make changes in DT Pro stuff for once every couple of years, but I got to go to all 13 of those different places and update it. Because we might have one or two stragglers out there on each one of those. The majority of them are focused in DT Pro or stuff that's like Cannon Capital or Gain or Global Futures and Global Zen Trader and stuff like that. But yeah, I have the one or two that are out there, and those are the platforms. Now I'm scrolling back to the beginning of the day on the NQ. We didn't have much on the NQ today either, guys. We only had 2 trades on the NQ. We had one plus 30 and one stop out. So I know I'm running over in my time span here, and I've been doing that a lot lately, and I apologize for that, but apparently I got a lot to say. If there's a lot happening, this is way better than the alternative, I think. Having a lot to say is way better than having nothing to say. All right, so our first trade here on the NQ, we ended up with a break even. So I guess I had 3 trades on the NQ. We had a break even. That is today, right? Yeah, that is today. All right, so I missed all these trades in here. Whatever we had going on in here, I missed them all. All right, all these green arrows and blue arrows and purple arrows, I missed all that stuff. Looks like a lot of it was pretty good. In here, if you get stopped out on one of these green arrows, the next one is just there's no trade there. But every one of those, you could have just gotten back right here. If you stopped out on those, you could have gotten right back. I don't know where I actually placed the trades in here, but I had one plus 30, and then I had one stop out right after it. Oh, well. I've just told you about the trades. There was one trade. Our first trade on the NQ was a plus 30, and our second trade, well, I guess our first trade was a break even. Then we had a plus 30. Then we had a stop out. That was all that we had on the NQ. Then I got into the lesson plan, and as I said, I talked until beyond 11:30 today. So if we just look in here, then we have some green arrows that triggered in there during the break. this would have had to put it in a lower swing, which it did not do until all the way over here. So this would have been the only green arrow trade that you could take until this one over here. You could take that one, this one, not that one, not that one. Then you could take that one and that one. And then you change directions and you get in here. This would have been the only green arrow trade you could take until it changed directions. And then this would have been the only green arrow you could take until you got here. Okay, and then you had to put in a lower swing, so you couldn't do that one. Then you did put in a lower swing. You had the blue arrow here. You had to skip the green. Now, the reason you have to do that is because every trade that you take, every blue and green arrow, even if you don't take it, every blue and green arrow has to continue the trend. It has to put in a lower swing before you can trade again. Right? So back here, where this one right here gave you the short but did not put in the lower swing, you had this one right here. You couldn't take that because you didn't have a trend. The trend didn't get continued from right here. Right? So you couldn't take that. This one right here didn't continue the trend. So you couldn't take this one because it's not with the trend. Right? Sadly, you could have taken that one. It would have stopped you out right away. And you wouldn't have done anything with that because the outer bands are flat. And as we go through this some more, you see there were some blue arrows, all those blue arrows worked out enough to get the stop to break even anyway, except that one. That would have stopped you. That brings us current. All right. Wow, it's 112. Anyway, for those of you guys who are just coming on in YouTube, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the free trial. Click on that, and that's going to bring you to this registration page. On this page, all we ask is your name, email, phone number. There's some drop downs, multiple choice questions right there. If you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. If you only have NinjaTrader, take the trial with TradingView. All right, get the indicators for TradingView on your charts. All right, to do that, you just go here to mytradingiq.com, click on trading platforms, and right here you will see the instructions right here for TradingView. Okay. Yeah, all this stuff for DT Pro is going to be changed as we roll to the newer version. I'm hoping that newer version is going to have a problem with our indicators, like the last one did with that one release. But we'll see. We'll see later today when I install them. All right. So trading. Let's get back into the trading. Lots of stuff. All right. So what we're looking for here right now on the YM, we're looking for price to pull back up and test the ribbon. We have all this lower swing and everything here. We didn't have any arrows since this last blue one back here, which put a nice move down in. We haven't had any that pulled all the way back up and tested the ribbon yet. Okay, on the ES and on the Russell, we're only looking for blue and green arrows. Actually, we can have no arrow too. We're only looking for bounces off the ribbon on the ES and the Russell. For the rest of the week, that's all I'm going to do with ES and the Russell is bounces off the ribbon. Okay. If you are in here and you're not an active partner, or you're not, I guess what I'm trying to say, if you're in here, we're having an open house right now that's running until Friday, so you can get into that if you're if you want to. Okay, if you don't have our stuff and you want to get into the open house, you can get in there and watch the rest of the week if you want to. Right? You can, I guess you can just go to the home page and sign up for the trial there, or you can just send us an email and we'll send you what you need to get into the open house. Okay. This purple arrow over here we can't take, it's going right into the zone. Okay.
When you reach the point where you're looking for something to look at, I would like you to look at Meta Planet. Not right now, but whenever you...
No, that's okay. We're in a spot right now where I can do that. What's Bitcoin doing? Bitcoin's, after that blue arrow, Bitcoin's still going. That's good. Let's go out here to this one and
Meta Planet.
This was Macy's we looked at the other day. Macy's has not recovered from that big gap down.
No, and it may not.
Not yet. Yeah. Right. Meta
Planet.
Planet right there. Meta Platforms?
Nope,
No,
Meta Planet. Try
type of
taping
word.
in the rest of it, yeah.
Planet Green Metals.
Make it all one word and see if that
Okay.
does the trick.
There it is. Metaplanet Inc. Toronto Stock Exchange.
Yeah. Here's my point. Look at what's happened to it since April.
Okay, let me go to a daily. A daily. There we go. Since April. Over here, yeah, it was down here doing nothing at all.
Now, you know why this happened?
Why did that happen?
It is up 500% since April, which is when it started buying Bitcoin, the same way MicroStrategies and other companies are doing.
Really?
500% gain.
500%.
Yep.
So if you only knew ahead of time that they're going to start buying Bitcoin with the coffers that they had.
So they didn't make it a secret.
They didn't?
Nope.
I got to think they can't really, because that's really investors' money, right?
Yeah, it's a publicly traded company, so they have to be very transparent with what they're going to do with the cash they have on hand.
Mm-hmm. Interesting. That's nice. All right. Well, while we're in it, look at 3550 is the ID. 3550. Metaplanet. 3550. GME was something I was supposed to look at for. I don't want to look at here on the daily, but where is it on the daily? It went as high as 2967. So the next level up, what's it saying here after the blue arrow? 2967. Target one is 48 on a daily. That is funny. Target one is 48 on a daily. When was it at 48? Was that this year? No, that was, yeah. No. It is right here in front of me. Yeah, this one right here, June 24th. So a month ago. Huh. Yeah. Well, that whole P&D, I mean, didn't Cuban get caught doing that with this stock? I thought he did. Yeah, well, we'll pass on it for right now. I only have 11 minutes left. And I have a feeling that's a longer conversation. All right, so looking at the GME, let me just take a picture of this. Okay. I'm going to take a literal picture because I can just text it. Hang on. This is what it looks like on a daily. Let's break it down to an hourly. Okay. Everything's triggering off the last red arrow right here. So we don't have any blue arrows triggering on the hourly to give us anything on the upside. Let's look at the 30-minute. Let's see if we have a blue arrow trigger on a 30-minute to give us anything on the upside. We don't. We're still working off this red arrow back here on a 30-minute to not give us any targets on the upside. Let's go to a 15-minute. I'm just doing this so it'll do the work for me, so I don't have to go and find all the nearby targets on the upside. Okay, so here it is. Take another picture of this. So the nearby targets on the upside, it's hit a bunch of them. The next one up is 29.93 and then 30.66. Okay, let me take a screenshot of this. Now you see what this is doing, guys? I know this is TV trades, but it's looking left and doing all the work for me. That's why I kept going to a smaller time frame. So it would look left and get all the exact numbers and do all the work for me with all these targets. Okay. And now, that one stock that Dwayne just mentioned, I think it doesn't have anything else, right? It was, what was it? Say it again. Metaplanet. Metaplanet. Metaplanet in here. What does it have on the table when it loads up? Yeah, the next level up. We're at 129 right now, so the next level up is 136, then 145, and then 147. The next level's up. Okay, that's what it's looking at here. I mean, there's no reason why it shouldn't make it. We have a gap right here that it didn't fill, a gap right here that it didn't fill. I don't know why it's having these gaps up day by day, but it hasn't done any retracement to fill any gaps.
Because of overnight trading in other countries.
Yeah, stocks don't necessarily do that. This is on a 15-minute chart right now.
If you're in the U.S., you have to stop trading stocks at 4 o'clock. But at 8 p.m. Eastern, traders in Asia start trading the same stocks we trade. And then at 3 a.m. Eastern, traders in the European markets, they start trading the same stocks we trade. This is why on stocks you see gaps up and gaps down almost every day on almost every stock.
This is the Toronto Stock Exchange, though, remember. So their hours are a little bit different. It looks like,
but the concept's the same.
Yeah, the concept is exactly the same. Yeah, the concept's exactly the same. That gap in there happens because these markets are closed while other markets are open. But this right here, the Toronto Stock Exchange, apparently opens up at 6 at night. I'm sorry, 8 at night. And it goes until 2 in the morning. That's what it looks like, right? Or it closes at 8 at night. It closes at 8 at night. Opens at 2 in the morning. What the heck? The first bar right here is 8 at night. And it goes and goes and goes and goes and goes and shuts down right here at 2 in the morning. Yep, that's what it is. So the first bar right here is 8. And it goes and goes and goes until 2 in the morning. So those are the hours for the Toronto Stock Exchange. At least that's what it was right here. Now,
anything happening in the world of futures?
Let's go back and look at futures. Sorry, I got totally, again, these rabbit holes. What's wrong with me? In the world of futures, we had a purple hour over here on the YM. This is not a valid ribbon trade here on the Russell because we're in the black. We're in the black right there. What we were looking for were trades that pulled back and hit the ribbon but didn't hit the black on these two markets right here. Right now, they could actually hit the black, and then the next bar could hit the ribbon but not hit the black, and that would still be a valid trade. Like this one right here might be. Over here on the NQ, we had the green arrow right there that put in a higher swing. Yeah, I totally went into another rabbit hole there. Sorry about that. All right. So much to do. So little brain capacity. All right. So we did put in a higher swing here, and you see that was off the ribbon right there. So now we want to see it. We want to see it come back down and touch the ribbon. If it touches the ribbon and does not touch the black line, then it's a valid trade, right? Because the outer bands are spread. It's a valid trade. Okay, this is what I wanted to do this for this week, just to illustrate to you guys that you don't need to have all this stuff on the chart. The minimal stuff, like the outer bands, the top and bottom ones say exactly the same thing. They give exactly the same information. You don't even have to have that on this chart. You could have it down here at the bottom if you wanted to. It'd be kind of difficult to separate it and put it down there at the bottom, but they give you the same information. It did right here. It just flattened out and turned red. And we got a gap up right there on that bar too. And the ES is on a 4 range too. That's worth noting as well. I bumped it down to a 4 range for this demonstration. Let's say experiment. Experiment means I haven't done it yet. Demonstration is what it is. So right now we are looking for a pullback here to the ribbon, pullback here. Well, actually, I want this to go up further. I don't want this to stop here and pull back because that's going to give us nothing worthwhile. The black line is not on the bottom. To take a bounce off the ribbon, the black line has to be on the opposite end of it. All right? You can't take a bounce off the ribbon when the black line's on the top. Can't take a bounce up off the ribbon when the black line's on the top. It has to be on the bottom. It has to be on the opposite end. Okay. See, like right here, it's pulling back down to hit the ribbon and the black is on the top. That's not going to be a trade. There's no way that would be a trade. It says it right in trade rules. Right here. Oops, these trade rules. For a long trade without the slingshot, the black line and the ribbon must be on the bottom. It says end in the green, but if it's on the bottom and price touches just the ribbon without touching the black line, then it's going to stay in the green. Okay. See, every time it pulls down and touches the black, like it did over here, price touches the black line gets in the silver. Price touches the black got in the silver. Price touches the black got in the silver. See? No trades right here. If I had the no trade zones on, you'd be having a no trade zone right here. Now this one, the rust you see has not touched the black line on this pullback, so this could still be a valid trade. Now it has touched it, so it's not a valid trade. Off the ribbon anyway. It would be a green arrow trade if it pulled onto the oversold. If I had the green arrows on. But I don't. All right, sorry about that rabbit hole. What's wrong with me lately? We have a low here right now of 57.7, so it pulled out of the oversold. So this right here would be a green arrow. If we had the green arrows on, you'd have a green arrow right here. And what you'd anticipate is that we get up here to the prior swing high. At the very minimum, we get up there to the prior swing high. And then, using the diamond principle, it would get to about right here over time. 62.4, roughly. I'm just eyeballing that. But if I were to do this, the fib retracement like this, and just do that, and then bring that right up there like that, be right up here. 63 is what it would be right there. That's what it should do. Okay, using the diamond principle, this is the first spot that it should get to, is right here. And it'll probably bounce off that, might get through it a little bit, but probably bounce off it. And then the next level should be up here. Why, you ask? You might ask. It's part of today's lesson plan. It was in the
NQ short, possibly?
NQ short, definitely. Let me go over there to the NQ. Hang on. I'm already short the NQ. From where, though, is the real question.
Yeah, unfortunately, it stopped down.
Yeah, I was already short the NQ from up here. 2037 is where I was short the NQ. Over here somehow. Yeah, let me just hit exit on that. I was short already. That's weird. I don't know why it was like that. Anyway.
For new traders, the NQ is extremely volatile. You're better off trading a different market while you're learning and getting your chops, and etc.
Yes. Yes, you are. All right. Well, I'm sorry. I ran through everything today. I talked through everything. Did I place any trades at all? I don't remember if I placed a single trade. Anyway, we're going to wrap it up for today.
I don't think so. I'm in no rush, so you take as much time as you want, but you probably have meetings, so.
Yeah, I got stuff going on. But
okay.
But look at this right here. Let me just go through and finish my explanation on this. Okay. The diamond principle, as I just illustrated here, this price should go up to here to fill out the diamond principle. Okay. And that is my term that I coined it. But what that means is price goes like this, right? Goes down here, then up here, and you have this extension, and you should repeat that extension up there. Okay, that's what I was showing to you with. I know I drew it with the fib thing because the fib thing is just easy to draw it with. And the retracement tool. If you take the retracement like that and extend that retracement, extend this retracement from the swing high, then that's where it should go, right right up there. That's where it should go. Now, the thing that you need to know about this retracement is that there's another retracement that it is part of. Okay, it is part of this one right here. This bigger move right here is what this retracement was part of. It was a 50% retracement, even better than 50% retracement of that move. So it just finished what I thought it was going to do on the upside. And that's exactly the way price should work. Exactly what you expect out of a trade. Exactly what price should do and how it should work. In a nice orderly market, it's going to be like that every time. Okay, you only do that once a day. You come down here. Let me just put the arrows on here. I'll put the green arrows on so you can see that you would have gotten a green arrow down there. Okay, with the long trade right there. Pink, there it is right there. You would have gotten a green arrow long trade right there. You need one of those a day. One a day. And you can wait for the market to get to a point where it does this exactly right. You can wait for that if you want to and take the trade that triggers when it does. It's up to you, but you need one of those a day and you'll have your goal for the day. And then if you have your goal for the day and you're consistently profitable, then these hourly rates are a real thing, a very real thing. All right. So one more time, if you haven't taken a free trial with us, go to mytradingiq.com. mytradingiq.com. Trying to get there. Go to the homepage at mytradingiq.com. Click on the purple button. No credit card required for the trial. Fill out the form, and that's all you need to do. All right. And that's it, D. With that, I can pass it out to you, fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain America's largest city park.
Folks, weekends do not count against you. So if you were to sign up for the trial today, which is a Wednesday, we'll get you set up today, but then your trial will be active Thursday and Friday. Saturday and Sunday doesn't count against you. And there are markets that trade over the weekend.
Yeah,
then you would still get Monday, Tuesday, and Wednesday of next week. So never worry about what day of the week or weekend or hour of the day you sign up for the trial. You'll always get 5 consecutive trading days. Even if there's a weekend, even if there's a holiday, you're going to get 5 consecutive trading days. No credit card required. We call it a free trial, but it's not free because it costs us in time, energy, resources, mentoring, etc. But for you, it's free. We want you to have a clear head so that at the end of the 5 days, you can make a well-informed and intelligent decision if trading is right for you.
That's right. All right.
Okay, recap of the morning session.
Today it took 10 minutes and 4 trades to get to $1,900.
Wonderful Wednesday.
Yes, it was.
Okay, guys, we shall pick up where we left off. We had only gotten to the daily chart. Now, for those of you that are members and follow along in the discussion group, you know that I've already proclaimed that a daily close below this 50% fib extension is going to take us to the 38% fib extension, which may potentially give us a bounce. When that bounce is over, and I don't expect it to be much of a bounce, then we encounter the daily BBC. That stands for bull bear cross. When prices below the green line, we're bearish, anticipating lower prices. Above the green line, we're bullish, anticipating higher prices. And you'll notice that the pullback, whether you pull up from below or pull down from above, pullback holds more often than not. However, I have many reasons to believe that this time when we hit the BBC, where we normally get a very nice bounce, we just might trade through it. This is the shallowest possible fib retracement right here, the 24% fib retracement, based off of the low put in April 19th and the new all-time historic high put in yesterday, July 16th. And again, it's pretty obvious which way the wind is blowing. I know I said this before, but I'm going to say it one more time. If you will train yourself to spend 2 minutes with the daily chart of whatever market you trade, whatever stock, crypto, Forex, ETF, if you'll just spend 2 minutes studying the daily chart, because you're looking at what the institutional traders are doing, because of their incredible count size, they actually move price. So Really, all you got to do is what they're doing long enough, get your goal for the day, and then have the discipline, put the mouse away. But let's get to the alerts. Okay, I showed you the results of Logic 247. Now I'm going to show you the results of the CTAs. The vertical lines separate today, Wednesday, from Tuesday, and here's Monday. These zones are published every Monday morning at 6:15 a.m. Eastern for the last 14 and a half years, since December 14th of 2009. When price rallies up to a zone, we expect resistance. When price drops to a zone, we expect support, till proven otherwise. Sometimes you'll spike it a little bit, other times, right on the nose. Support will always send the market to resistance. This resistance sent us back to the BBC. Remember I said price always reverts to the mean? So when price drops to the BBC, we expect support. Support is going to send us looking for resistance, which we found at the zone. That resistance is going to send us back to support, back to resistance, back to support, back to resistance, and then we finally overcame that resistance by just a little bit. And we're always very suspicious of just a little bit, which is why you're seeing, part of why you're seeing what you see here today. Now, these targets were published last night, 10 minutes after the market opened at 6 p.m. Eastern. Price was trapped, support below, resistance above. So we needed to wait for price to get below this weekly trading zone before we could actually start thinking about shorting our way to the short target. So let's say you waited to get below the low of that candle right there, 5,700. That's a 5-point drop to the target. You only need 2 points to get your goal for the day. We continued down. We got to the weekly zone, and what did we do? We consolidated. When price encounters a weekly zone, 70% of the time you're going to get consolidation. 20% of the time you're going to get this and this, rejection. 10% of the time you'll get what's called the slice. That's when price slices through a weekly zone on the 30-minute chart like it's not even there. When that happens, typically, as the move runs out of steam, price will retrace to the zone it sliced through and then continue in the direction of the slice. Now, this wasn't a true slice because it was part of this consolidation pattern. But when I see a good one, I'll show it to you. Well, here's one. This candle sliced all the way through the zone like it wasn't even there. But then it retraced back up to the zone it sliced through, 5673/74, and then it continued in the direction of the slice. And what's it trying to do now? We're below the BBC. We've got red and falling. Remember, price is always trying to get to a weekly trading zone. It almost got there on this candle. For the sun sets, we may be sitting at 5627/28, which is a very important price, important area, because it was also a weekly trading zone last week. Now, the new zones come out every Monday morning at 6:15 a.m. Eastern, but occasionally, in fact, almost every week, there's 3 to 4, maybe 5 across the different markets, zones that remain the same. Okay. Now, do you got to wait for price to take out this low? You could. Or you could short 56.36 down to 34. Goal for the day. I'm going to show you again. You could actually go 37. But conservatively, you could go 36 to 34. And goal for the day. Now, Do I have any reason at this point to think that price is going to move higher? Nothing on this chart tells me that. Everything on this chart tells me the price is going to continue lower. Keep in mind, price rarely travels in a straight line. Even though on the daily candle, it looks like price just fell straight down, but it put in a leg and a little retracement, then a leg and then a retracement, then a leg and a retracement, a leg and a retracement, and a leg and a retracement, a leg and a retracement. Now we'll come back and look at this later. Now for those of you who may have tuned in late, let me show you this in case you missed it at the beginning of the broadcast. These are the concierge trade alerts. The logic alerts come out around the clock, but the CTAs are published as a static report shortly after the Globex open. So every one of our members and trial members had all of these targets last night, 10 minutes after the open. That's important. Okay, so now we're on the Dow. Okay, here's where the Dow opened. We ran into red and falling, which we expect to be resistance. It pushed us down through the BBC. Now remember, the pullback holds more often than not, but eventually it will trade through. But as it traded through, what did it do? It pulled back to the BBC. And it held, and it held, and it held, and it held, until we put in this low here. That was buyers coming in just ahead of this low from yesterday. And they powered us up through the BBC, through the long target, and then we got to when the market finds resistance, it's going to come look for support. Support's going to send it to resistance. Now you see the black step line is starting to cross from the left side to the right side, blue and climbing. That indicator is called the CFMA1. I refer to it as blue and climbing, red and falling. One is bullish, the other bearish. When that black step line crosses to the right side of blue and climbing, that is a very good indication that for now you may have put in your high and that price is now going to attempt to retrace back to the BBC. Price always reverts to the mean. Pullback holds more often than not, but eventually it's going to trade through at some point. Now, let's say price were to drop to the BBC and it didn't hold. What would you do? Well, $41,250 to $41,230. That would give you your goal for the day. You see this bullish cross here where the blue line got above the green line? Whenever you have a bullish cross that leads to an extended move, the first time price revisits that area, whether it's an hour, a day, a week, a month, or a year, it will almost always be good support. Opposite is true of a bearish cross. Does it happen every time? There's very few things in the world of trading that happen every time. Does it happen more often than not? Just ask one of our traders. On the Russell, this was the open last night. Again, price trapped, resistance overhead. The zone and the BBC both support below. Price ran into red and falling, and it took us down to the BBC, through the BBC. We hit the zone, and then what happens 70% of the time? We consolidate. Buyers came in off of this consolidation and drove us within a couple ticks of the long target. Resistance will always send the market looking for support. Why did price stop right there? Here's your answer. Support sends us to resistance at the zone. Resistance sends us to support. Tracking with me? Support sends us to resistance. Resistance sends us back to support. That low right there. You want to let price get, you see that low and this low, almost identical. So let price get down. Now you could do this. On the Russell, you only need 2 points. You could trade 22.58 to 22.56. Goal for the day. Or you could let price get below this low and this low. And you could open a position at 22.51 on the short side and have a nice 6-point ride down to the target at 45. That's 6 points. Now that's waiting for price to get down here to 51. Again, there's plenty of room to short it right here. K and Q. This is the open last night. We consolidated at the zone. We got red and falling overhead. We're below the BBC. We're only thinking short. No reason to think long. And right to the target. Now, let's say you waited till this area right in here to get short. 25.50. We'll just call it 30 points. It's more than that, but to the target's 30 points. At $20 a point, that's $600 per contract traded. Once you've earned the right to trade 10 contracts, that same move is $6 grand. Now, we teach you to just get your goal for the day and put the mouse away. But I know that many of you want to be discretionary traders. You want those big moves. So first, you have to master the mechanical model in the live training room. Then I will teach you discretionary trading. So we continue to drop to the zone where we do what? Consolidate. And now we've continued dropping to the weekly zone where the market found support. Now today's Wednesday. Remember, these zones were published when? Monday morning, 6:15 a.m. Eastern. Still have one zone left below 19,565/66. Now you see how the step line has crossed to the right side of red and falling? See over here, when it crossed, it pulled up to the zone, but there wasn't enough buying interest to take it all the way to the BBC, which is what typically happens. The step line has crossed here. Looks like we may want to go down and bounce off that zone one more time and then get a retracement to the BBC. Now, I told you that in the Logic 247 channel, there's over 17,200 individual handcrafted alerts. Every one of them is a trend trade. Now, I define the trend on the 30-minute chart based on price and the BBC. So for me to put out, I would never put in the Logic channel a long alert back up to the BBC because that would be a counter trend trade. Nothing wrong with counter trend trading. But trust me, you need to master trading with the trend before you start swimming upstream. Okay? I say just say that for your own benefit. I'm not saying that I never counter trend trade. Okay? But I'm only going to teach you trend trading till you master that. And if you want me to help you with counter trend, I will. Okay? Right now, we've got support at the zone. Okay, that covers all the indices. Let's go to crude oil. We had crude inventories today. Here's where we opened last night. Below the BBC, below red and falling. Just like falling out of bed. Didn't take a lot of effort to get to the target. And that low, look familiar? See where that black line crossed the red line? I haven't taught you guys yet that but I am when I get around to it. So support sends us to resistance, which sends us back to support at the same spot, creating a double bottom. Support sends us to resistance at the zone. Remember, when price moves up to a zone, we expect resistance. When price drops to a zone, we expect support till proven otherwise. So we hit resistance. What are you going to do? Watch the market retrace to the BBC. And you expect it to hold until proven otherwise. Once this candle closed, you're pretty sure it's held. So this candle right here opened at 80.92 and ran all the way to 81.15. It's $230 per contract traded. And that's a trend trade. Okay. After we consolidated at the zone, first we consolidated here for an hour and a half. And we got 3 30-minute candles here. And then we make our way right up to the long target. And based on those crude inventories, we just kept going and going. But we may have hit an important inflection point. Follow my horizontal line on the cursor all the way over, not to Tuesday, not to Monday, all the way back to Friday. See that eye right there? Price failed to take out that high. The step line has crossed. See how on this beautiful move up, we had the perfect stack. Price, step line, blue and climbing. What's changed? What's different about this picture now? The step line is now on the right side of blue and climbing. Does that tell us to expect a retracement? Could get a bounce here. Eventually price, in most cases, will drop back to the BBC. Price always reverts to the mean, and we expect the pullback to hold. Whether it's pulling from below or pulling from above, we expect it to hold until proven otherwise. Why? Because it holds more often than it doesn't. Gold. Here's where we opened last night. We had some resistance overhead. We needed to get above the zone. Now, the good news with gold is you only need $1 of movement to get your goal for the day. So let's say you entered here or here, 24.83. That's $300 per contract traded up to the target. Now, when the market finds resistance, it's going to go look for support, to resistance, to support, to resistance. Now, we traded through the BBC this time, but look what happened when we pull back up. Pull back held. With red and falling overhead, we would expect that. And the move has continued down. We've not yet made it all the way to the short target. Just take this one candle here. It opened at 24.68 and it dropped to 24.57. That's that one candle right there is $1,100 per contract traded. Once you've earned the right to trade 10 contracts, that'd be 11 grand. Now, when you become a member, you don't start trading 10 contracts or even one contract live. You're going to get the 2420 blueprint, which is going to walk you through the process of starting out in your demo account, because you've got to learn the strategy. You've got to learn how to read the chart. You've got to learn how to read the indicators, okay? So the blueprint is going to guide you through 10 consecutive days where you reach your goal in 10 trades or less. Once you've accomplished that, then the blueprint will give you the green light to go live with one contract. Now that you're trading live, your goal is to increase your account balance by 2 grand. Once you do that, the blueprint will give you the green light to add a second contract. Now, here's the beautiful thing about the second contract. The first contract was funded with your startup capital, but the second contract is funded with profit you earned in the market. Blueprint is going to tell you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. But you only add one at a time when it's time, and you only add with profit you earned in the market. If you have the discipline to follow that, it will make it far more difficult to blow up another account. In fact, you'll have to break some rules, to be honest. So what do we got? A triple bottom going here. But do I expect price to continue lower? 24.50. Let's go 24.55. It's a 6-point move down to the target. That would be another $600 per contract traded. Now, it very well could trade through the target and continue on down to the zone. See how when first price ran up to the zone and it was resistance, which sent it to support, which sent it to resistance, which sent it to support, which sent it to resistance. Over and over, again and again, it's a never-ending cycle. I don't care if you're trading futures, stocks, crypto, Forex, ETFs. That's how markets work. You won't hear that probably anywhere else, because everybody else always has something extra to sell you. We got the passport. Passport is everything. It's everything. Not just the live training room, not just the one-on-one mentoring. I'll show you the list here in a minute, lest I get sidetracked or down a rabbit hole. Okay. Do we have any reason to think about trading long? No, not yet. Price would have to get all the way back above the BBC and this bearish cross. And then, would I trade 79 to 80 and get my goal for the day? Yeah. I don't foresee that happening, but you got to embrace all possibilities. Silver. Whoa, baby. From 31.60 to 30.60, that's $5,000 per contract traded. Silver has dropped over $5,000 per contract this session. We opened last night. We got above red and falling, spiked up and hit the target, pulled back into this little blue and climbing here, hit the target again, but then we dropped below the BBC and we dropped all the way to the short target. Now, where did the market find support? At the zone. Where did it find resistance yesterday? At the zone. Support sends us to resistance. Resistance sends us to support. You see, when price hit this zone right here at 30.58/59, this was a red candle all the way down. But it hit the zone, support, and it bounced it all the way back up to here, 30.83. 2 pennies is $100 per contract traded. Now, support gave us a bounce, but we still got the perfect stack. Price comes down, trades through. Step line has crossed. We may get a retracement back to the BBC. And the last market, euro. Here's where we open, pull back to the VBC, hit the target, pull back to the VBC, hit the zone, consolidated, hit the zone, consolidated, pull back to the BBC. We got red and falling overhead. So I suspect we'll see lower prices on the euro. On the daily, price still trying to work its way down to that 38% fib extension. To become a lifetime member, go to mytradingiq.com. If you have questions, call 949-42-EMINI or send an email to support@cfrn.net. Now, 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. They got books, they got videos, they got a grumpy guru somewhere. But you need a living, breathing teacher, putting on, taking off trades live in real time, explaining every move they make, every trade they take, the rule behind it, while you ask questions and trade along in your demo account so that you can qualify to go live. I wish I could tell you the passport would guarantee you're going to become the 1 out of 10. But even though we give you all the information you need and all the tools you need, we don't know what you're going to do with them. Are you going to use them properly? Are you going to exercise discipline and self-control? We don't know. What I can say is that as a passport holder, you have a fighting chance at becoming the 1 out of 10. Along with 2 hours of live training in an interactive environment every trading day, you also have access to private one-on-one mentoring at no extra charge. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets, all time frames. As a passport holder, you also get the Logic 247 alerts, the concierge trade alerts, the weekly trading zones. You're able to attend to the members only workshop on Thursday night. All that and so much more. It truly is everything a trader needs, all under one roof, at one low price. And one thing you don't see listed here is not something you buy. It is a value-added service that we provide to all of our clients. It's called the Telegram discussion groups. It's where you get to mix and mingle with our other traders. Now, the reason we don't charge for it, but give it to you as a value-added service, is because if you don't behave, you'll be warned and warned again, and probably even pleaded with to just behave. Because we promise everyone a family-friendly environment. If you repeatedly violate those terms of service, you will be permanently banned from the Telegram discussion group. You'll still have access to the live training room. You'll still have access to the software. You'll still have access to the members-only workshop on Thursday night. But we will not allow you to ruin it for everybody else with vile behavior in our Telegram discussion groups. MyTradingIQ.com, 949-42-EMINI, support@cfrn.net. Oh, and by the way, if your emails become vile and vulgar, they will be blacklisted. Just saying. 99.99% of our members are happy campers. Some people are just mad at the world. I can't change it. I can't fix it. I'm sorry. I can't help you, but maybe somebody somewhere can. Okay? Again, 99.99% of all of our members are very happy campers. Why? Because they're learning how to trade. For the first time in their life, they realized that there can actually be a future for them in the world of trading. And that puts pep in my step. All right, good word for the day. Yesterday, we talked about how God sees you. Today, we're going to talk about a different topic. How to walk out of the process. Huh? What does that even mean? Let me explain. Joshua 1:3. Every place that the sole of your foot will tread upon, I have given you. The book of Job has 42 chapters. In the first 41 chapters, Job experienced the loss of his health, his wealth, and his family. Did you ever wonder why his wife didn't get taken out? Because when you get married, two become one flesh. And God told the enemy, you can do whatever you want. You can sift him like sand, but you can't touch him. And his wife and he had become one flesh. That's just a little trivia. Over and over again, Job questioned God, but only got silence for an answer. We hate it when that happens, don't we? But he kept walking with God. And in Job 23:10, he said, when he has tested me, I shall come forth as gold. Now I want you to notice three things here. First, to become gold, you have to go through the fire. Second, the degree of heat and the amount of time required is determined by the refiner. Third, when you try to rush the process, you end up with a substance of lesser value, like tin. God told Joshua, I will give you every place where you set your foot. In other words, to get what I have promised, you must walk out of the process. American poet C.V. White wrote these words. The man who succeeds never waits for the crowd. He strikes out for himself. It takes nerve. It takes a lot of grit. But the man that succeeds has both. Success is the accomplishment of that which people think cannot be done. Complacency, fatigue, doubt, criticism, and discouragement are everyday hurdles you must constantly overcome. We get this idea in our head that someday we're going to have all our ducks lined up in a row, and then life's going to be easy peasy. No, not this side of the River Jordan. I'm going to say it again. Complacency, fatigue, doubt, criticism, and discouragement are everyday hurdles you must constantly overcome. Okay, how do you do that? You keep on walking. Or as they said back in the day, keep on trucking. You'll notice a common thread throughout the Bible. When you really need him, God shows up and does for you what you can't do for yourself. The rest of the time, which is most of the time, he strengthens you and says, you have to walk out the process. And that's our good word for today. You know what? I had said I was going to do something, and I like to try and do what I say I'm going to do. So you got to go. It's all right. But if you got a minute, I'm going to run you through this real quick. I think you can. Okay. It's going to take me a minute, guys, but let me scroll. Okay, here we go. I'm going to go through this quick. But you can always go back and watch it later on the YouTube channel once it gets posted. It's streaming live there now, so it doesn't take too long for it to get ready for you to watch again. We're in week 311. Last week, week 310, we issued a total of 70 alerts, 20 never triggered. We had 50 actionable alerts, of which 8 or 16% would have been stopped out based on market structure and the very simple process we teach all of our passport holders. So week 311 began this past Sunday night at 6 p.m. Eastern. The first alert came out 2 minutes after the open. Now this is Pacific time because I'm on Pacific time. Telegram, which is the app I'm using, reads the computer on your clock. Your clock's computer. Your computer's clock. So if you're on the East Coast, it's going to say 6:02 p.m. If you're in the Midwest, it's going to say, I don't know, 4 or 5. But Arizona doesn't do daylight savings time, so 8 months out of the year, I'm on Pacific time. 4 months, I'm on Mountain Standard. So that's why this says 3:02 and not 6:02. If you look at the same thing on your computer and you're on the East Coast, it's going to say 6:02. So the first alert Sunday night was alert number 17,189. Yes, it was, to be short, 56.54 with an initial target at 56.52. And then the next target or potential support at 56.48. And then the weekly trading zone was 56.44/45. That trade dropped to 44 1/4. S means sell, T means initial target, PS means potential support. So on a short, you'll see potential support as the next target. On a long, you'll see PR, potential resistance, as the next target. So we had a short on the ES, and we had a long on the ES. Buy 57.02, initial target 57.04. The initial target is designed to help you get your goal for the day. And then the next target or potential resistance was at 57.07. And the final trade to target is always the weekly zone above on a long or the weekly zone below on a short. The zone was 57.10/11. We dropped to 57.08. Oh, I'm sorry. At the time of the recap, we were at 57.12.75. But remember, you only need this part to get your goal for the day. This one hasn't triggered. Here we had a long on the Dow, long on the Russell, never triggered. Short on the NQ, short on crude oil, never triggered. A long on gold, a long on crude that hadn't triggered, but I think today it has. So Valerie, she updates this throughout the week. We had a short on silver. We had a long on silver. And we had a long on the euro. That was a gap fill trade. All of what you just saw happened Sunday night. Remember, most traders don't go to work till Monday morning at 9:30 a.m. Eastern. We go to work Sunday night at 6 p.m. Eastern. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 profitable trades Sunday night. By the grace of God. Okay, then we roll into Monday morning, where we have a long on the Dow. We have a long on gold. We have a long on the Russell. No trigger. Long on the ES. Stop out on the Dow. When you see the red X, that's when they got stopped out. Based on market structure and that very simple process that I teach all of our passport holders. Long on the Russell, B is buy. Stop out on the NQ. Short on the NQ. Long on gold. No trigger. Short on silver. Stop out on silver. Now we're rolling into Tuesday. Long on the ES. Short on the ES. Long on the Russell. No trigger. Short on the NQ. Long on gold. Short on silver. Long on silver. No trigger. Short on crude oil. Long on crude oil. No trigger. Short on the ES. Stop out on the Dow. Short on crude oil. Short on the ES. Short on the ES. No trigger. Short on the NQ. No trigger, no trigger, no trigger. Now some of those may have triggered today, and so of course Valerie will update the recap. Long on the Dow. Short on the Dow. No trigger, no trigger, no trigger. Short on silver. And short on the NQ. So that brings us up currently through today, Wednesday. And we're now at alert number 17,200. The next alert to come out will be number 17,245. Now, when you're on the trial, you have access to these alerts, and these alerts come out well before they trigger. You see, I use these logic alerts to teach you to read the chart. That's how I determine where the entry and the initial target and the second target and the third target and the final target are. Okay? And that's what I teach you when you become a member. Okay? So that's our week so far. We still got the rest of today, and we got Thursday, and we got Friday. And in case you missed the recap when I posted it, I'll show you one more time. So far this week, we've issued 43 alerts. Still waiting on 18. 38 actionable. 4 stop outs. 11% based on market structure. And that simple process I teach all of our passport holders. So, once again, thanks so much for tuning in. Wherever you are, may God continue to richly bless you with His mercy and with His grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.